Okay, I am here to continue my review. Tomorrow I have my test at 2 p.m. This is the state test for life, health, and annuities. It is a 2 hour test. Um, and this will be take two, my second time taking the test. But this time is a little different because I'm gonna have to go to the testing center. Anyhow, this chapter is life policy riders provisions, options, and exclusions. Question: which of the following is true about non-forfeiture values? They're required to be included in the policy. Non-forfeiture values are required by state law to be included in the policy and cannot be altered by the policy owner. A table showing non-forfeiture values for the next 20 years must be included in the policy. Question: when the insured selects the extended term non-forfeiture option, the cash value be used to purchase term insurance with what face amount? That face amount would be equal to policy as long as the cash value will purchase. With this option, the cash value is used in a single premium purchase in the same face amount as the original policy for as long as a period of time as the cash will buy the insured's current age. Next question. An insurer is involved in a car accident. In addition to less serious injuries, he permanently loses his use of his leg and is rendered completely blind. The blindness improves a month later. To what extent will the insured receive perceptive disability benefits? They will get no benefits. Perceptive disability plans offer full benefits for specific conditions. These policies typically require the loss of use of at least two limbs, total and permanent blindness, or loss of speech or hearing. Benefits are paid if the insured is able to work because the insured's blindness was only temporary and the loss was of use of only one leg. He does not qualify for presumptive disability benefits. Presumptive disability plans. An insured who has an accidental death and dismemberment policy loses her left arm in an accident. What type of benefit will she most likely receive from this policy? In this case, the capital amount in a lump sum. Accidental death and dismemberment policies pay a capital amount, a percentage of the principal amount, for the loss of one limb or the loss of sight in one eye. The principal amount is paid for the death or often the loss of two limbs or the loss of sight in both eyes. Benefits will be paid in a lump sum. Sucks. How are HMO territories typically divided? They're geographic areas. The HMO offers services to those living within specific geographic boundaries. For example, along county lines. Persons who live within the boundaries are eligible to belong to an HMO, but they do not. But if they do not live within the boundaries, they are ineligible. In which of the following locations would skilled care most likely be provided? An institutional setting. Skilled nursing care is performed under the direction of a physician, usually in an institution or an institutional setting. In long-term insurance, what type of care is provided with intermediate care? Occasional nursing or rehab. Intermediate care is nursing and rehab provided by a medical professional for stable conditions that require assistance on less frequent basis than skilled care. What size of companies are eligible for health reimbursement accounts? HRAs. Companies of all sizes. HRAs are open to employees of companies of all sizes. Next question. Regarding the taxation of business overhead policies, premiums are deductible and benefits are taxed. The premiums paid for business overhead policies insurance are tax deductible to the business as a business expense. However, benefits received are taxable to the business as received. All of the following are true about group disability income, except coverage applies both on and off the job. Employees who are injured on the job are covered by workers' comp insurance. Group disability income insurance is designed to cover employees only while they work off the job, so the coverage is considered non-occupational in nature. So again, all of the following are true about group disability income, except coverage applies both on and off the job. That's not true. A lucky individual won state lottery. To the state, the state will be sending him a check each month for the next 25 years. What type of annuity product are they likely to use to provide benefits? Immediate annuity. I don't want to wait. An immediate annuity purchase with a single lump sum payment with a 25-year period distribution will be most suitable for this arrangement. Which of the following about group disability income or insurance except are true about group and disability income? Except coverage doesn't apply both on and off the job. Okay, moving on. Manny has been injured in an accident. Although she is still receiving benefits from her policy, she does not have to pay. Her policy includes a waiver of premium. A waiver of premium rider causes the insurer to waive the premium when an accident or disease causes disability lasting at least 6 months. Under a health insurance policy, benefits other than death benefits, what have not otherwise been assigned to be paid to? Under a health insurance policy, benefits other than death benefits that have not otherwise been assigned will be paid to the insured. So I haven't assigned anybody for my policy, so it's mine, or my estate. Payments for loss of life benefits are to be made to a designated beneficiary. If no beneficiary has been named, payment proceeds are paid to the deceased insurer's estate. Claims other than death benefits are to be paid to the insured or insurer's estate, otherwise assigned by the insured. What is a period of coverage for events such as death or divorce under COBRA? 36 months. The maximum period of coverage of COBRA is 36 months. In the event of a covered employee's death or divorce, it's almost the same. Which of the following statements is not correct concerning the COBRA Act of 1985? It requires all employers, regardless of number or age of employees, to provide extended group health coverage. That's not true. COBRA Act applies only to employers with 20 or more employees. 20 or more. How many consecutive months other than acute care unit of a hospital must long-term care insurance provide in this state? Texas. 12. Long-term care policies, which can be marked in the form of individual policies, group policies, or as riders to life insurance policies, provide coverage for individuals who are no longer able to live an independent lifestyle and require living assistance at home or in a nursing home. They must provide coverage for at least 12 consecutive months in a setting other than an acute unit in a hospital. An insured who has an accidental death and dismemberment policy loses their left arm in an accident. What benefit will she most likely receive from this policy? Capital amount and a lump sum. AD&D policies pay a capital amount, a percentage of the principal amount for the loss of one limb or loss of sight of one eye. The principal amount is paid for death or often two limbs or loss of sight in both eyes. Benefits are always paid in lump sum. Long-term disability insurance. What type of care is provided with intermediate care? Occasional nursing or rehab? We've said that one. I have doubles. And this is a bill. Okay. Under the Fair Credit Reporting Act, if a consumer challenges the accuracy of the information contained in a consumer or investigative report, the reporting agency must respond to the consumer's complaint. The consumer has a right to request the information on the report, the reasons for turn down, and any adverse underwriting decisions. The reporting agency is required to respond to the customer's complaint, and if any necessary, to reinvestigate the report. So they have to respond. The proposed insured makes a premium payment to a new insurance policy. If the insured should die, the insurer will pay the death benefit to the beneficiary if the policy is approved. This is an example of what type of contract. Conditional. A conditional contract requires both the insured and policy owner to meet certain conditions before the contract can be executed. Unlike other types of policies, which put a burden of conditions on either the insurer or policy owner. An insurer purchased a 15-year level term life insurance policy with the base amount of $100,000. The policy contained an AD&D rider offering double indemnity. The insurer was severely injured in an auto accident and after 10 weeks of hospitalization died from injuries. How will the beneficiary receive the policy? How much will they receive from the policy? And since they have the double, it's $200,000. The beneficiary will most likely receive twice the face amount of the policy since the insured fatal injuries were caused by an accident and he died within 90-day period benefit limit stipulation in most policies. In reference to the standard Medicare supplement benefit plan, what does the term standard mean? All providers will have the same coverage options and conditions for each plan. In reference to standard Medicare supplement benefit plans, the term standard implies that providers will have the same coverage options and conditions for each plan. An underwriter may obtain information on applicants' hobbies, financial status, and habits by ordering an inspection report. An inspection report may be ordered by an applicant from an independent investigating firm or credit agency. It is a general report of the application, finances, character, work, hobbies, and habits. So that is inspection report. The term fixed and a fixed annuity refers to all of the following except death benefit. A fixed annuity, in the sense that provides a guaranteed premium, guaranteed minimum rate of interest and income payments that do not vary from one to the next, the company also guarantees a specific dollar amount for each payment and length of the payout period. Annuities do not provide a death benefit. Annuities don't provide a death benefit. Which of the following is a short-term annuity that limits the amounts paid to a specific fixed period or until a specific fixed amount is liquidated? Annuity certain. Annuity certain option allows the annuitant to select the time period of the amount of benefits to be paid out under the installments or fixed period. Distribution begins on a specific date and stops on a specific date. That is fixed annuity. An insurer neglects to pay a legitimate claim that is covered under the terms of the policy. Which of the following insurance principles has the insured violated? Consideration. The binding force in any contract is consideration. Consideration on the part of the insured is a payment or premium, and the health perceptions made in the applications. Consideration on the part of the insured is promises to pay in the event of the insurer promises to pay in the event of a loss. Or dwindling down. This arrangement specifies who purchases a disabled partner's interest in the event that he or she becomes disabled. That's a disability buyout. The disability buyout agreement specifies who will purchase a disabled person interest, and legality obligates that person or party to purchase such interest upon disability. Which of the following long-term care benefits would provide coverage for care for functionally impaired adults, less than 24-hour basis? That's adult daycare respite. Adult daycare is designed for those who required assistance with various adult daycare living on a daily basis, but not around the clock. Custodial care is usually the only service provided by adult daycare facilities. In order for an insurer under Medicare Part A to receive benefits for care and skilled nursing facility, which of the following conditions must be met? The insured must have first been hospitalized for 3 consecutive days. Part A covers the cost of care in a skilled nursing facility as long as the patient was hospitalized for 3 consecutive days. The service The services are medically necessary and only up to the amount deemed. Can't have too many band-aids. Might go over that limit. Which of the following is true regarding the accumulation period of an annuity? It is a period during which the payments into the annuity grow tax deferred. So the annuity grows tax deferred into the annuitization period. Well, when they're in annuitization period. Oh, yeah. Accumulation period, they call it. This is a period of time over which the annuitant makes payments of premiums into an annuity. This is a period of time which the payments earn interest and grow tax deferred. Which of the following is incorrect concerning Medicaid? It is solely a federally administered program. That's incorrect. Oh, let's go. Okay. Insurers usually do not reimburse claimants for 100% of income loss due to disability. What is the reason for the insurer limitations on coverage amount? To provide an incentive for the insured to return back to work. The reason the insurers don't pay benefits that are equal to the insurer's prior earnings is to reduce the chance of malingering and on the part of the insured. Limiting the amount of coverage provides an incentive for the insured to return to work after a disability, as opposed to collecting benefits when he or she is capable of working. In a disability policy, the probation period refers to the time during which illness-related disabilities are excluded from coverage. The probationary period limits coverage on new policies for certain illness-related conditions. Which of the following disability income policies would pay the highest? 15-day waiting period and a 10-year benefit period. The waiting period or elimination period is a time from the onset of a disability the insured must wait before becoming eligible for benefits. The shorter the wait period, the higher the premium. After the insured satisfies the wait period, they will receive the benefits from the insured for a limited benefit period. The longer the benefit period, the higher the premium. A disability income policy that requires a short wait period and the longest benefit period is the most expensive. I can see that. Benefit periods for individual short-term disability policies will usually continue from 6 months to 2 years. Short-term disability is defined as disability lasting not more than 2 years. Okay. Which is true about spouse term rider. The spouse term rider allows a spouse to be added for coverage. It is available for a limited amount of time, typically expiring at the age of 65. A spouse term rider, just like any other insured rider, is usually level term insurance. An insured died by suicide 1 year after a life insurance policy was issued. The insurer will, if the insured dies by suicide within 2 years following the policy effective date, the insurer's liability is limited to a refund of premium. Which rider, when attached to a permanent life insurance policy, provides the amount of insurance on every family member? That is a family term rider. A single rider that provides coverage on every family member is called a family term rider. What is the other term for cash payment settlement option? That is lump sum. Upon the death of the insured, the contract is designed to pay the proceeds in cash, called lump sum. Which of the following protects the insured from an unintentional policy lapse? That would be due to non-payment of premium. That's automatic premium loan provision. Is not required, but is commonly added to contracts with cash value at no additional charge. This is a special type of loan that prevents unintentional lapse of policy due to non-payment of premium. Okay. A policy owner who is also the insured wants to name her husband as the beneficiary of her life policy. She also wishes to retain all the rights of ownership. The policy owner should have her husband named as revocable beneficiary. The policy owner may change the revocable designation at any time and without the consent of the beneficiary. Irrevocable beneficiary, on the other hand, have a vested interest in the policy, so the policy owner may not be able to exercise certain rights without their consent. All the following are non-forfeiture options except interest only. Non-forfeiture values include cash surrender, extended term, and reduced payout. Interest only is a settlement option. Okay. I think we are stopping here.